Every trader starts with ambition. The charts are moving, the money feels close, and the idea of making it big from your screen seems almost too perfect. But after a few trades, after a few fast wins and even faster losses, something changes. You stop trusting yourself. You chase entries. You move your stop. You hesitate at the worst time and then overcommit when you shouldn't. And you wonder, what am I doing wrong? It's not the market. It's not your broker. It's not bad luck. It's that you're missing something invisible, a line between randomness and repeatability, between reaction and execution, between hope and strategy. That line is made up of two elements, your setup and your edge. The setup tells you when to act. The edge tells you why it's worth acting. This isn't just about finding a pattern or memorizing indicators. It's about building a framework so precise and personal. It becomes your compass in the chaos. In the next 25 minutes, we're going to decode that, not just technically, but psychologically, emotionally, and tactically. Because once you define your setup and discover your edge, you stop guessing and you start trading. Part 1. What is a trading setup? A trading setup is not a signal. It's not an indicator telling you what to do. It's not someone's tweet or a guru's alert or a hunch you have after watching price bounce around for 20 minutes. A trading setup is a predefined condition, a pattern or structure you've clearly decided in advance that tells you, if A, B, and C happen, I will consider taking a trade. It's your filter. It protects you from the chaos. It stops you from trading out of emotion or boredom. It's the difference between acting with intention and reacting impulsively. Think of it like this. If the market is a battlefield, your setup is your sniper scope. It helps you filter out the noise and wait for precision. You don't shoot at every shadow, you wait for alignment. Let's break it down with a simple analogy. Imagine you're a wildlife photographer. You're sitting in the jungle, camera ready, waiting for a tiger. You don't randomly click your camera at every rustling leaf or chirping bird. You wait for your criteria, a specific sound, a certain movement, a trail of paw prints, and then, when it all lines up, you take the shot. That's what a setup does in trading. It says, I will only trade when price pulls back to the 50 EMA. I will only trade when RSI is below 30. I will only enter when there's a bullish engulfing candle after a rejection wick. Whatever your setup is, it needs to be clear, repeatable, and back-tested. Not just something that looks good, not just a gut feeling. There are thousands of possible setups out there. Breakout setups, pullback setups, reversal setups, trend continuation setups, mean reversion setups. But the goal isn't to master all of them. The goal is to find one that suits your style, your risk tolerance, your time frame, and then master it. And here's the thing. A setup isn't about predicting the future. It's about preparing for a specific condition where the odds may favor you. Without a setup, every trade is a gamble. With a setup, every trade becomes a measured decision. It doesn't guarantee success, but it creates a foundation. And in trading, foundation is everything. Part 2. The psychology behind setups. Most people don't realize this, but the real power of a trading setup isn't just technical, it's psychological. When you trade without a setup, you're exposed. Every tick of the price feels personal. You find yourself jumping into trades just because the market moved quickly. You chase candles. You hesitate. You overthink. And every loss feels like a personal failure, not just part of a plan. But once you define your setup, clearly, objectively, you start to reclaim control over your decision-making. You stop asking, should I take this trade? And start asking, does this meet my setup? That shift seems small, but it's everything. See, the human brain hates uncertainty. In trading, that uncertainty can drive us to seek constant stimulation, entering just to feel in control, exiting just to avoid regret. But when you've already defined your criteria in advance, you bypass that emotional loop. You've already decided what good enough looks like. So when the market tempts you with almost setups, those trades that kind of look good but don't fully align, you learn to sit still. And that's rare. Most traders can't sit still. A good setup creates emotional boundaries. It's your defense against your worst self. The impatient version of you, the revenge trader, the bored trader who just wants action. Even more powerful, setups create consistency. And with consistency comes data. When you repeat the same conditions over and over, you start to learn how your setup behaves. You begin to spot patterns, not in the market, but in yourself. You learn how often your setup wins, how it behaves in different market environments, how it performs when you're tired or distracted or frustrated. And once you see all that, once you recognize that your setup is more than a pattern on a chart, you stop looking for the next big trick. You stop chasing strategies on YouTube. You stop overcomplicating everything. You realize the edge isn't in adding more, it's in mastering what you already have. And that starts with trusting your setup, not just mechanically, but mentally. Because when your mind knows exactly what it's looking for, you stop reacting to the market and start responding with purpose. Part 3. What is a trading edge? If your setup tells you when to act, your edge tells you why that action will pay off, not once, but over time. A trading edge is often misunderstood. It's not a magic signal. It's not a cheat code. It's not something you buy from a Discord group or download from a website. Your edge is your probability advantage. It's what makes your trades profitable in the long run, even if some of them lose. Here's the brutal truth. Every single trade is uncertain. You can have the perfect setup and still lose. That's not failure, that's probability. The best traders don't aim to be right every time. They aim to put the odds in their favor and then play those odds consistently. So what does an edge actually look like? It could be a setup that wins 60% of the time with a 1.2 risk-reward ratio. That's a statistical edge. It could be the way you manage risk, cutting losers quickly and letting winners run. That's an execution edge. It could be your emotional control, the way you stick to your plan when others panic. That's a psychological edge. Or maybe you've discovered that a certain pattern works better in specific time frames or at certain times of day. That's a market behavior edge. The key here is this. An edge is something you've proven, not something you believe blindly. You've tested it. You've tracked it. You've seen it work over dozens, maybe hundreds of trades. And when you have an edge, a real one, you don't get rattled by individual losses. You see losses as part of the equation, like a casino that knows its odds. It doesn't panic when someone wins at the roulette table. It knows that over time, the math plays out in its favor. That's how you need to think as a trader, not emotionally, not trade by trade, but statistically, systematically. Having an edge gives you the mental clarity to stay patient, to wait for your setup, and to not sabotage yourself when the market goes through its natural noise. But most traders skip this step. They think a setup is enough. They take a few wins and assume it works. Then the market shifts, the setup fails, and they abandon it, assuming it was broken. But an edge isn't just about winning. It's about understanding why it wins and when it doesn't. It's about knowing the underlying dynamics that make it profitable over time. And once you understand your edge, you stop thinking like a hopeful gambler and start operating like a risk manager. Because you're not just trading charts, you're trading probabilities. And that's the language professionals speak. Part 4. Setup versus edge. What's the difference? A lot of traders confuse a setup with an edge, and that's where their strategy starts to break down. These two concepts are related, but they are not the same. Understanding the difference between the two is like learning the difference between pressing the trigger and knowing when the bullet will hit the target. Let's keep it simple. Your setup is the condition that tells you when to enter a trade. It's your structure, your filter. It might include a chart pattern, an indicator signal, a specific time of day, or a price behavior you've learned to recognize. But your edge is the deeper layer. It's the reason that setup is worth trading in the first place. You can have a setup without an edge, and many traders do. They follow a pattern that looks good, but they've never tested it. They don't know how often it wins. They don't know what conditions improve or weaken it. They're trading a pattern but not a probability. That's like playing poker with a decent hand, without knowing the odds. Let's say your setup is a pullback to the 50 EMA followed by a bullish engulfing candle. That's a valid setup. But do you know how often that pattern plays out successfully, how many times it fakes out, what the average win looks like versus the average loss, whether it works better in trending markets or ranging ones. If you don't, then your setup has no edge. It's just a visual idea. On the flip side, you could have an edge without a rigid setup. For example, if you've mastered reading market sentiment or have superior discipline in cutting losses. But without a consistent setup, your edge has no vehicle. It's like having a powerful engine with no car to put it in, so you need both. The setup gives you consistency. The edge gives you confidence. The setup tells you when to pull the trigger. The edge tells you why it's worth pulling. And this is where many traders go wrong. They copy someone else's setup, thinking it's a shortcut. But even if the setup looks the same on the surface, the edge behind it may not translate. Maybe that trader understands context better. Maybe they've back-tested it for months. Maybe they have the patience to wait for high-quality versions of the pattern. If you don't know the why behind the setup, you don't own the edge. You're just borrowing someone's formula without understanding the math. In the end, your setup is what you see. Your edge is what you know about what you see. When those two align, when you have a repeatable condition backed by real statistical or behavioral advantage, you're no longer trading with hope. You're trading with intention. And in this game, that single shift can make the difference between blowing up your account and building one that lasts. Part 5. Real-life example. A setup with edge. Let's make all of this real. Imagine you've been watching a currency pair, say EUR-USD. Over the past few weeks, it's been trending upward. Strong higher highs, clear momentum, clean price action. You're not chasing the trend, you're waiting for a pullback. Price starts to pull back toward the 200 EMA, a key moving average that acts as dynamic support in trending markets. As it approaches the EMA, you notice something important. The candles are getting smaller. The bearish momentum is weakening. You glance at your RSI and it's dropped to 28, indicating the market is now in oversold territory. That tells you sellers may be exhausted. Then you get your final condition. A bullish engulfing candle forms, rejecting the 200 EMA with a long wick to the downside. That's your signal. All your conditions are met. This is your setup. Price pullback to 200 EMA RSI below 30. Bullish engulfing candle. But here's where your edge comes in. You've been back-testing this exact scenario. You've collected data from 150 past trades on this setup in uptrending Forex pairs. Here's what you found. Win rate, 62% average winner, 1.8x, your risk. Average loser, 1x, your risk. Drawdowns are shallow when trend is strong. Fewer false signals during London or NY sessions. This is the kind of insight most traders never reach, because they don't test, they don't track, they just guess. But you've done the work. You know that if you take this exact setup with discipline and if you use a 1-2 risk-reward target, you'll be profitable over time, even if some trades fail. This is how trading becomes scalable and stress-free. You're not panicking over one win or one loss. You're not making emotional decisions in the heat of the moment. You're simply following your validated setup, knowing it's backed by a proven edge. You also know when not to take the trade. If this same pattern showed up during Asian session with low volatility, or on a sideways chart with no clear trend, you'd skip it, because your data told you it underperforms in those conditions. That's the power of combining setup and edge. You don't just trade more, you trade better. Your edge makes the setup intelligent. Your setup gives the edge a structure. Most traders will never reach this level of clarity because they keep chasing new indicators, new systems, new secrets. But when you zoom out and treat trading like a craft, something you study, test, refine, then everything slows down. Everything becomes cleaner. You realize that you're not trading to be entertained. You're trading to be consistent. And consistency doesn't come from guessing. It comes from knowing. And you only know when you've seen the pattern and studied it enough times to trust it. Part 6. Finding your edge. Finding an edge isn't about copying someone else's strategy. It's about discovering what gives you an advantage in the market. And that discovery is deeply personal. Most traders never find their edge because they're too busy looking outside. They hop from system to system, strategy to strategy, always assuming the next course, the next mentor, the next indicator will finally crack the code. But an edge doesn't come from the outside. It comes from observation, repetition, and reflection. So where do you start? You start with tracking. Not just your wins and losses, but everything. The setup, the time of day, the market condition, your emotional state, the news cycle, your confidence level, even how well you slept. You build a journal, not just for stats, but for self-awareness. Because your edge might not be what you think. Maybe your setup works best during New York session but falls apart in Asia. Maybe your pattern has a 40% win rate, but delivers 3.1 risk-reward trades, making it highly profitable. Maybe you trade best when you're calm, focused, and working from a clean environment. And your edge is psychological, not technical. Edges come in many forms. Statistical edge, a setup with a favorable win rate and payoff ratio. Behavioral edge, your ability to stay disciplined and stick to your plan when others panic. Execution edge, you enter and exit cleanly without hesitation or slippage. Emotional edge, you manage fear and greed better than most. Market timing edge, you know when to stay out, which is just as powerful as knowing when to get in. And here's something most traders overlook. Your edge might be small. Maybe you only have a 3% advantage, but with proper risk management, that's all you need. Casinos run billion-dollar businesses on smaller odds than that. The key is consistency. An edge only matters when it's applied again and again, with discipline, over hundreds of trades. That's where it compounds. That's where confidence grows. That's where experience starts to whisper things the chart can't say out loud. And no one can give that to you. They can share setups. They can share tools. But the edge? That's yours to uncover. Through your mistakes, through your growth, through your commitment to mastering not just the market, but your response to it. Because at the end of the day, trading isn't about being perfect. It's about building something that works for you, something you've tested, trusted, and earned. That's your edge. Not borrowed, not faked, built. Part 7. Why most traders fail, ignoring setup and edge. Here's the uncomfortable truth. Most traders fail not because they lack intelligence, but because they refuse to commit to structure. They enter the market chasing profit, not process. And because of that, they treat every trade like a gamble. Every spike looks like an opportunity. Every dip feels like danger. They live in a state of emotional whiplash, pulled between fear and greed, between regret and hope. And it's all because they don't have a setup and they've never defined their edge. Instead, they operate on what feels good in the moment. They trade what they think will happen. They react to the market like a spectator watching a game they didn't study for. And this behavior is costly. Without a setup, you have no consistency. Without an edge, you have no confidence. Without both, every trade becomes a roll of the dice. You win some, you lose more. And over time, you start to doubt yourself, even when you're doing the right thing. You start blaming the market, the broker, the volatility, anything but the missing structure in your own system. What makes it worse is that modern trading is filled with noise. You're flooded with strategies, signals, indicators, systems. Everyone claims their method is proven, their signals are accurate, their results are guaranteed, and so you chase, you copy. You try 5 different setups in 2 weeks, you switch timeframes, you jump from swing trading to scalping, and eventually, you burn out. But the truth is simple. The traders who make it, the ones who survive and then thrive, do the boring work. They define one setup. They test it relentlessly. They measure results. They refine slowly. They protect capital first. And they build their edge one layer at a time. You don't need 100 strategies. You need one you understand deeply. You don't need to win every trade. You need to manage every trade according to your edge. You don't need perfect entries. You need a repeatable process that stacks probability in your favor. In short, most traders fail because they never slow down long enough to master the 2 most important questions in trading. What am I looking for? And why does it work? Until you can answer those with clarity, every trade will feel like guesswork. But the moment you can answer them, with precision, with data, with conviction, you stop trading emotionally and start trading professionally. And that shift is what separates the gamblers from the consistent performers, not the size of their account, not their fancy setup, just that quiet understanding of their own system and the edge behind it. Part 8. Setup plus edge plus psychology, consistency. You've now seen the pieces. The setup gives you structure, the edge gives you advantage. But there's one more ingredient that brings it all together: psychology. Because even with the best setup in the world, and even with a proven edge, none of it matters if your mindset breaks down in the moment that counts. You know the feeling. You've waited patiently for your setup. It's forming. You're ready. But suddenly, doubt creeps in. What if this one fails? What if I wait and it runs without me? What if I lose again? And just like that, your plan unravels. You hesitate and miss the entry. You jump in early without confirmation. You move your stop. You cut your winner too soon. You over-leverage. You revenge trade. You chase. It's not that the setup was bad. It's not that your edge disappeared. It's that your emotions took over. And this is where trading gets real. Because markets don't just test your logic, they test your identity. They expose your relationship with uncertainty, with risk, with patience, with loss. They reveal whether you're here for adrenaline or discipline, whether you trust your system, or you're still operating on fear and ego. This is why trading psychology isn't something separate. It's not an extra. It's not something you read about after you've learned the technicals. It is the foundation that allows the technicals to actually work. Because consistency doesn't come from having the perfect system. It comes from applying your system the same way, every time, under pressure. When your psychology is aligned with your strategy, you stop overreacting to single trades. You stop needing every setup to work. You stop panicking when you're wrong. Because you know you have something bigger guiding you. A process built on setup and edge, not on emotion. That's where confidence is born. Not from winning all the time, but from knowing you don't have to. When you have a setup that filters out noise, an edge that gives you a statistical or behavioral advantage, and a mindset that doesn't fall apart under stress, then trading becomes what it was always meant to be. A business of repeatable decisions in an environment of uncertainty. And when you treat it that way, you stop chasing consistency and start becoming it. Part 9. The compound effect of precision. Most traders obsess over the next trade, the next entry, the next setup. But the best traders, they obsess over process. Because they understand something most don't, that trading mastery isn't built in one moment. It's built in layers, repetitions, logs, patterns, reflection. Every time you take a setup that meets your criteria, and only when it meets your criteria, you are reinforcing a structure. Every time you follow your edge, whether the trade wins or loses, you are building a database of experience. And every time you stay calm in the face of noise, you are strengthening your emotional resilience. This is how consistency is born, not from intensity, but from intentional repetition. Over time, you start to notice things other traders miss. You sense when a setup is clean versus when it's forced. You see weakness in the trend before others react. You feel the rhythm of your system. It's no longer mechanical, it becomes instinctive but grounded in structure. And here's what's even more powerful. You start to see trading as boring. Not in a dull way, in a stable, focused, emotionless way. You're no longer looking for thrills. You're not chasing trades because you need action. You're executing because your system demands it, and you trust it. This level of discipline might sound robotic, but in truth, it's the most freeing place to trade from. No anxiety, no impulsiveness, just flow, precision, and peace of mind. You start to understand that one bad trade doesn't define you, and neither does one good trade, because you're not here for moments. You're here for momentum, the kind that builds quietly day after day through aligned decisions. You know how most traders stay stuck in the same cycle for years? It's not because they don't work hard, it's because they work in circles. They abandon setups too early. They never define an edge. They let emotions reset their process every week. But when you stay on the path, when you choose precision over perfection, patience over urgency, and structure over chaos, something shifts. Your equity curve stops looking like a roller coaster. Your confidence stabilizes. You stop trying to predict and start executing with trust. And that's when the real results begin to compound, not just in your account balance, but in your identity as a trader. Part 10, the freedom of mastery, trading with setup, edge, and self-trust. At some point in your journey, a quiet realization will hit you. The goal of trading isn't to win every time, it's to win over time. You'll stop measuring your success by the outcome of your latest trade. You'll stop thinking in terms of good or bad days, and you'll start thinking in terms of executed or not executed, followed plan or didn't. That shift is where freedom begins, because once you've defined your setup, discovered your edge, and developed the emotional maturity to apply both, you're no longer just a trader. You're a professional, a risk manager, a decision maker in an uncertain world, with clarity. That doesn't mean it's always easy. There will still be losing streaks. There will still be frustration. But you'll stop panicking when it happens. You'll stop spiraling into doubt. Because you know the foundation you've built is solid. And in that space, between discipline and belief, your results will start to reflect something rare: consistency without chaos. Other traders will still be searching. They'll still be asking which indicator is best, which stock to buy, which strategy to copy. But you'll already know what you're waiting for. You'll already know how to measure it. And more importantly, you'll already know who you are when you're trading. That's the real end game. It's not just about profits or performance. It's about trading in a way that aligns with your nature, your psychology, your time, your strengths. It's about waking up and knowing you don't have to guess. You just have to show up, follow your system, and let the math play out. Because in the end, markets are unpredictable, but you don't have to be. That's the freedom most traders never find, because they're too focused on outcome and not enough on process. But you've chosen the opposite. You've chosen to define your setup, build your edge, strengthen your mindset, and trust your system over your feelings. And in doing that, you've done something few ever do. You've made trading sustainable, you've made it yours, and that is mastery. From uncertainty to intention, the trader you're becoming. You've now traveled through the blueprint most never take the time to build, the foundation of true, consistent trading. We began with a simple question: why do most traders fail? And the answer, as you now know, isn't a lack of skill or talent. It's the absence of a system, of structure, of self-awareness. But you've seen the difference now. You understand that a setup is not a signal. It's a structured condition you've defined to protect you from impulsive decisions. It's how you bring order to chaos. You understand that an edge is your advantage, not a magic trick, but a probability that plays out in your favor over time. A truth you've earned through observation, repetition, and testing. You've seen that without these two elements, and without the psychology to apply them, trading becomes nothing more than emotional roulette. But you've also seen the alternative. What happens when structure replaces stress? When process replaces panic? When every trade is a decision, not a reaction? The most powerful part? You don't need to be perfect. You just need to be consistent with your system. Because over time, that consistency does more than grow your account. It shapes your identity, it builds confidence, it replaces doubt with discipline. It transforms trading from a source of frustration into a skill you control. That's the journey you're on now, and it's not one that ends, because mastery in trading is a moving target. The market evolves, you evolve, but what remains constant is the foundation you've now committed to. Setup, edge, psychology, process. This is what professional trading is built on. And if you stay grounded in that, if you keep refining, keep journaling, keep learning, then no matter what the market does, up, down, sideways, you will not be shaken. Because you're no longer trading to prove something. You're trading with clarity, with alignment, with purpose. And that's when trading stops being noise. and becomes a language only you can speak.
If you found this helpful, hit like, subscribe, and tap the bell so you never miss a drop. Got thoughts or questions? Leave a comment below. I'm always checking in. Thanks for watching, and I'll see you in the next one. Check out this next video